And Tom, maybe it's funny, as you were saying the house hack thing, I'm like, it's such a good answer. Maybe leave that part off and then we'll talk about it at the end.
No way, man. I'm
He's
going with
taking
it.
away one of your best points.
No way. Get out of here. It's mine. It's mine.
Sweep the leg, Johnny.
Yeah.
What's going on, everyone? Welcome to another episode of The Remote Investor. I'm Michael Albom, and I'm joined today in studio by one of my co-hosts,
Pierre Carrillo.
and virtually by our other co-host,
Tom Schneider.
And today, we're going to be doing a showdown episode talking about what makes more sense, buying an investment property first or buying a primary residence first. Hot topic, hot button issue. Tom, you ready to get into this, man?
Let's do it. Rock and roll.
Tom, I will give you I'll let you start, man.
Full disclosure, we both bought rental investment properties before owner occupied. So there's.
I think it's such an important point to make.
But I think it's fun. I'll take the opposite side. I'll say owner occupied first.
Own a primary residence first.
Yeah. And
Okay.
then in tradition of the format, we'll, flip around.
Okay, I love it. I love it. Why in the world would you think owning a primary residence first makes more sense than investing in property?
All right. 3 reasons why it is definitely better to buy a house that you're going to live in before investing remotely or investing in a property that you're not living. Number 1,
Well, this ought to
the
be
old
good.
adage, invest in yourself. So by the very nature of buying something remote or buying an investment property, that means you're still going to be paying rent. So unless you're staying in, mom's basement or wherever, you're going to be throwing money away paying rent. And we can get rid of that, kind of lost cost of paying rent by buying a house that you're going to be living in. So that's number 1. Number 2 is related to you don't know what you don't know until you know it. And in dealing with real estate, there is a ton to learn. And what better place to learn about real estate than boots on the ground, actual experience? So me, in buying a home and living in it, man, I've learned a whole lot about wear and tear, cost expectations, just all the intricacies of owning a home and all those related costs that stuff come up. What better way than being boots on the floor? And my last point, which I'm excited to say, is why not do both, Michael? Why not do both? So there's this wonderful strategy in real estate investing called house hacking, where you are living in a home and you are also collecting rent at that same property, something you are very familiar with as you have done this as a strategy before. So why not do both? Buy the house, rent it, live in it, and rent out, either the parking lot or the upstairs room or the duplex or whatever. There's just so many other ways to cut this. So that is why it is a no-brainer to buy the house that you're going to live in first before you buy a rental property.
All right. What a flurry.
Chess clock.
Tom, thank you.
Hit the chess clock. Go ahead. Back to you.
I just first off wanted to say thank you, Tom, for making so many of my points for me with your argument about why it makes sense to buy investment property first. So when it comes to learning about a property, like you mentioned, you don't know what you don't know until you know it. When you've got investment property, you can invest anywhere in the country. It doesn't have to be where you live. So you and I and Pierre, we all happen to be California residents. If we're buying property in California, it's probably north of $500,000. Is that fair to say to live in? That's just kind of where the market is here in California. And so me personally, if I'm going to learn a lesson, I would rather go learn it on a $100,000 property whilst I have someone paying me rent to then take care of those repairs, as opposed to learning lessons on a $500,000 or maybe even $1 million property because of where we live. So I want to aim small, miss small. I'm not trying to swing for the fences and learn mistakes on a $1 million house that is my primary residence. So I love the point that you made about learning lessons and how important that is, because I couldn't agree more about how important it is to learn. But again, I want to learn those lessons on someone else's dime as opposed to my own. Secondly, when you move into a house and your air conditioner breaks, that's you on the hook for those repairs, as opposed to, you say, throwing money away, quote unquote, with renting. If my air conditioner breaks at the rental house that I live at, I call the landlord and say, hey, I need the AC repaired, and it get fixed tomorrow. Oh, and that doesn't affect my rent, by the way. So I think when it comes to buying property, it makes sense to buy less expensive property in a market that you don't necessarily live in, because you're getting into the market. And as they say, time in the market is so much more important than timing the market. And so I was someone that I lived in the Bay Area, California. It's a really expensive market to own in. And I didn't have a down payment to go buy my primary residence. Even at a lower down payment amount on $1 million property, even a 5% down payment, I didn't have. But I did have enough down payment to go put 20% down on a $120,000 property. And by the way, that property paid me every single month in the form of cash flow and tax benefits. So I'm curious to know, Tom, what your primary owner occupant property paid you each and every month.
Reminds me of the old, forget who said this, but when you're renting, your rent is the maximum you pay every month. And when you buy, your mortgage is the minimum you're going to pay every month.
Yeah. Oh, that's so well said. That's so well said. Yeah. Pierre's on my team.
Well, no, both of these points kind of suggest that to house hack, you'd have to be in a point in your life where you would want someone else in your home. Right now, I don't want anyone in my house. I don't want some weirdo renting a room from me. I mean, it'd have to be like a special, like, my niece was going to college in a close town, and like that would be the only possible way. And even then, I wouldn't charge her.
Would you
full
charge
rent.
your niece rent? Yeah, exactly.
It's a misconception that you need to get into ownership right away.
Owner occupant, right?
It's a huge burden.
It is. And think about like moving. If you want to go move from this house that you live in, well, now you either have to sell it or convert it to a rental, and then you're managing a rental, which could or could not be a great thing for you depending on that stage of life. But if you're renting, you just pick up and leave. Like your lease duration is what's keeping you there.
All right, Tom, I think you should get a full couple of minutes here to rebut all of the responses to yours.
I'd love to.
He's going to need hours to respond.
I'd love to. No, just going to So your point about, I'd much rather just, learn my lessons on a really inexpensive house than like a more expensive house.
Is that what I sound like to you and everybody listening?
That's what I hear. You sheep. You sheep.
He's a sheep person.
Tell you what I'm going to say to that, Michael. Penny wise, pound foolish. Sure. Yeah. Oh, you can go find a $50,000 house, like, under the airport, takeoff landing, but, realistically, like, I'm not going to lie, like real estate is expensive, and, there are great mechanisms to allow you to buy, but it's expensive. And I don't think you should make your decisions just on like, what's the cheapest possible property out there, So I think that whole like lens on that, like, oh, I'm just going to look for something cheap and it's going to be easier to do it that way. That's just silly. That's just silly. And let's see, the other point I was going to make is, at the end of the day, like, you have optionality, start by buying it, live it, and then you can, move somewhere else, and then you have a rental. There's no reason why you can't kind of make it a launching pad of initially living in it. And honestly, this is a point I should have made earlier. Your financing, the finance you're going to be able to get is going to be so much better as an owner occupied. So if you do as, maybe I'm calling this a little pad hopper, right? Starting it as an occupied and then moving out and then bringing in a renter. Ooh, there's some real financial upside on the kind of financing you're going to get with that kind of a setup. So anyways, tons of downstream benefit by
There's no way I could get the rent. There's no way that I could get enough rent to pay my mortgage in my current house.
I think that's totally fair, Pierre. But depends on where you're living, right? Like there's a lot of places that you can live in, right? And I'm not saying buy that $1 million house, or even $500,000 house. Sure, there's certain areas that are cost prohibitive, but I'm not saying you buy in those, you live in those areas. I'm saying you be strategic about it. A home that could potentially convert into a rental that you feel comfortable, that you want to be at.
Yeah.
So there we go. I'm going to go ahead and rest my case. And if Michael, you want to, go whimper in the corner, you're welcome to, or do you have a rebuttal?
Well, I want to support one of your points too, Tom. That when you're looking at these lower value properties, 100,000, like you say, 150,000 on your pro forma template, it pencils out to be a 13, 15% cash on cash return. But then you have one system go down for the year, and that your profit margin is then that one repair for the year.
Yeah. It's totally fair. The other thing I just going to say to that is that on your taxes, the rental property is vastly more impactful than the owner occupant. And so while your cash flow might be killed, the tax benefits that you're going to see from that are actually going to make you a better borrower down the road to then go buy a primary residence after the fact. So
right.
I think I would just, as someone who did this, encourage everyone to think about buying investment property first because it's going to pay you in cash flow. It's going to pay you in tax benefits. You're going to spend less on the down payment as you would on a primary residence in some markets, depending on where you live, Tom, to your point. But I was generating a portfolio that then threw off enough cash to then pay the mortgage that I went and bought and acquired for my primary residence. Versus if I had done it the other way, if I went and bought a primary residence first, it would have taken me years and years and years to save up all those down payments to go buy those subsequent investment properties. So I think I was further off ahead faster financially by buying investment property first.
All right, Pierre, do we switch sides?
Mic drop, exit stage left, or
Yeah, I think that was it. That was 2 rounds each. So do you want to now lead off this time, Michael? And you will take the contrary position this time.
Yeah, I can do that. Tom, it looked like, were you itching to say something? All right, Tom. So little role reversal now. So I think it can make a lot of sense to buy investment property first. Obviously, I'm a product of that. But that being said, now having the the beauty of hindsight, or what is it? There's some phraseology about knowing what's behind you now.
Hindsight 2020.
Hindsight's 2020. Thank you. Buying a primary residence, putting 3.5% down, or 3% down, or 5% down, whatever it is, at a 2.5% interest rate or 3% interest rate, if someone bought during the pandemic, is like unbelievably powerful. Because then you can borrow against that equity going forward. Owner-occupant homes tend to appreciate faster than rentals. And then you borrow against that, take that equity, and then go buy investment property. And you've also now solved for your living situation. So you're not paying rent, you're paying yourself, you're buying equity, the home's appreciating. You're then taking that equity, borrowing against it at a better interest rate than you would to go buy investment property than you would get if you're just buying investment property. It's like, I think you said it, Tom, a no-brainer. So it makes total sense to go buy your primary residence before you start investing.
Good point. But I think, you're just a little missed the mark here. I think one of the things that you cannot overvalue is flexibility. And why would you put a ball and chain around yourself on just limiting yourself exactly, where you're going to live? I mean, the whole beauty of this remote investing piece is you have total flexibility to run around, go live in a school bus for 6 months and drive around, right? If I have a
message
mortgage
received
and an owner, this is funny because Michael did live in a school bus for a while. If I have a remote or an investment property, it opens it up to just like, the world is my oyster. And, in my younger ages, like I don't want to have to be living in, XYZ. I want opportunity. I want to run around. I want to go, life is short. And, part of that is enabling myself to have the power to get the benefits of real estate investing, right? Get the benefits of being able to use leverage to buy these assets and then, take out a HELOC, all that good stuff that you were talking about on that rental property. But you can do it in a way that doesn't like limit your flexibility by making it your owner occupied home. So give yourself that flexibility, buy an investment property first. Sure, something opportunistically could come in that you want to live in, but really put that value on the flexibility, being able to move around.
It's such a good point, Tom. And like, I couldn't agree more that the flexibility is so key, which is why buying a primary residence is the move first. Because, so I'll just share a personal anecdote. We bought a primary residence down on the Central Coast of California, and then we participated in home exchanges. There's a website called homeexchange.com. You put your house on there. You literally swap houses with people. And there's no cost because you own their home. You own your home. They own their home, and you go live in their home while they're living in your home. Or there's like point swaps, whatever. So it doesn't have to be reciprocal. But to that exact point, we purchased a primary residence to be able to travel. So we also purchased it with the intent of converting it to a rental at some point down the road. So We got owner occupant financing. We then traveled the country and the world because we had a house to offer up to other people to come stay in. And then when we moved out at the end of the year, we had a rental at owner occupant financing. And it's one of the best performing rentals that we own, and it's in California. So I again love that you're just making these points for me, Tom. It's just, this is why I love doing this with you. You make it too easy, man.
Yeah.
Every point can be argued to both sides of this. It's like it's such a flexible asset class that you can really make it work for you in whatever format you get blessed in.
Absolutely. And I think, we do these in jest because it is so fun, and you can argue both sides of this coin. And depending on where you are in your stage of life, Tom, like you were mentioning, having someone live in the house, or Pierre, like you mentioned, having someone sharing a space with you or sharing a wall, that might make sense for you, or it may not. And so if that's not you, think about some of these other strategies to take part in.
Yeah. And I think it's tricky, living in an area that's really expensive. Like, it was just not practical at all for me to buy a primary property first. That's where I mean, both of us got into rent investment properties first. So, I mean, that's definitely a big part of the equation. What kind of flexibility you want, what's kind of opportunistic, where you want to live. But yeah, no, a fun topic to go back and forth on.
No, always a pleasure, man. But Tom, I love the point that you made about house hacking. It is so, having done it again personally, it is one of the best ways to get into real estate investing, and simultaneously solve for the housing issue that, rent versus buy. It can be, if you do it right, a beautiful mix of both worlds combining. You get the experience of a landlord, the benefits of primary residences, some of the tax benefits of investment property. So it can really be the triple threat when it comes to investing and getting into real estate.
It's the move when you're young, man. I wish I would have known about that concept when I was 19, 20 years old. I mean, that would have completely changed my strategy through my 20s.
Totally.
There's a lot of interesting flavors on house hacking too. Like, obviously if you have a duplex, like, it's pretty straightforward. Like, I think another interesting one is there's a platform where you can rent out, if you have like a large parking space, like an RV, where you can actually rent out that, if you're in an area that has that kind of demand. So like, that's one. There's, I think HipCamp is another one. Like, if you have space, like, you can rent out.
Yeah.
There's just a lot of flavors of it. And again, this is probably really situational to where you live at, on like what those different options are. But it's, really interesting way to go about it. Or a rental, right? Or excuse me, like a short-term rental. Like, you can live in it in the down seasons, and then,
yes,
feast on the high seasons, and making some hay during that period of time.
Big time. Love the agriculture reference.
Food for some future episodes.
Absolutely. Well, what do you think, guys? Should we get out of here?
Let's go.
Awesome. Well, thanks everyone for hanging out with us. Really appreciate it. Hope you got some insightful takeaways from Tom and I's ridiculous banter. And as always, look forward to seeing you on the next one. Happy investing.
Happy investing.